Okay, a recap of a trade taken on US30, and full disclosure, wasn't the best executed, I would argue, um, but um, managed to pull it off nonetheless. So my approach is to trade the opening range of Wall Street. And this is why my charts are set up the way they are. I use the Trend Predator Pro as my satellite navigation, as it were, and then I'm in the driving seat. So I get my directions from the Trend Predator Pro, and then through a combination of top-down analysis, combining the weeks, the months, the days, looking to see where traders are trapped. So just briefly, with the daily chart here, I'm using the Trend Predator fake out highlighter, which gives us the switch bars and fake out highs and lows and breakdowns and break up bars. So this enables me to track the flow of the market on the daily chart as well as the weekly and monthly. And just looking at the daily chart for now, I'm doing all my markings up before the open, and given that the market was top heavy, so trap traders up top, a nice breakdown bar, and with that breakdown bar we've got a switch on the weekly chart as well, breaking out. So this was the high of that week, so a switch below that week, the week's high, so broken down market. And then we've got a switch bar here on the daily chart. So we've got a market that broke out to the upside. And then this is the switch level. So anything below this area on the chart is going to be bearish for my day ahead. Okay, so that's the day that is currently still in full motion towards the switch level on the monthly chart. So breakout on the month, and we're coming back in to retest those highs. That's what markets do. They break out, they pull back, and they either fail, go into a trading range, or they continue in the direction of the breakout. So the play today was the reversal of yesterday's bullish close. We had a bar that broke out, gave us a switch level, bullish above, bearish below. But given the flow of the market, a strongly rejected market up top, the bias is to be shorting, looking for the short. Okay, so that's our thesis for the day. And then we come into our TPO chart. So this is a TPO chart similar to volume profile, and it looks very colorful and confusing, but it really, once you get to understand it, it's very logical. What we're doing is we're trading in line with the flow of the volume. And as you can see, the flow of the volume from the point of control is rising. So it would make sense to trade long in line with the flow, so long as we stay in flow. But as you can see, we're not, because what we're doing is we're trading back below, as I've said just earlier, that switch level. This is Tuesday's highs. So up here, you've got volume, point of control from Wall Street, that's trapped up high. And then we come down. We had a Globex overnight session with volume that's now pulling lower. Therefore, we want to trade in line with that flow of volume. Point of control, fair value, is now coming back inside of Tuesday's peak formation low, pushing up. So the thesis is, if it's not continuing, then we trade the reversal, and that's exactly what we got. And as you can see here, we've got the sessions. You've got Asia boxed off in the orange box. You've got London boxed off. And what did London do? Well, it put in a high for the day that failed. Okay, as I said, markets do one of three things. They break out, pull back, and one of the things that they do is fail, or they continue, or they range. And this is failing, fake out high. So that there aligns with our thesis that yesterday's volume from Wall Street is trapped. And therefore, what we're doing is we're trading with the trap. Okay, so as we come into our Wall Street session, what we can do with the TPO here is just mark off levels. So we've got our volume area high from yesterday. I've already got it on the chart, but I'm just doing it in. Just pull that down a bit skew with. So there's the volume area high. The thesis is if we get inside of yesterday's volume area, then we can rotate all the way back through it. And that's exactly what we got. All right, so we mark off our charts and we're looking left, further afield. We've got the volume area low of the current week, which is an interesting level. We'll look at that in a moment. And then even further left, we've got this naked point control from, when's that? All the way back from last Friday or 2 Fridays ago. And then we've got the monthly breakout level as a full-on target. Okay. Coming into the Trend Predator Pro chart, which essentially is, like I said, my satellite navigation. It gives us a 2-star quality setup so long as we're below the switch level, Tuesday's highs. And we get the open. So pumps and dumps. That's exactly what we wanted to see. A pump up, pulling traders up high, only to trap them, and then we pull away from them very aggressively. Now, this was a very strong move off the bat. A 9:45 candle that closed there instigated my entry. I figured, look, so long as we're below that London low, and I've got my stop loss placed in an area where I'm likely wrong, and this essentially, if we get a fake out low of the London lows and it pulls up, then the probability is, if we're going to assume that the market will continue to do what it's doing, then that fake out low is trap traders short. So I've been trapped and I just want to get out as quick as possible. So if it comes up and continues, I'm out of the trade. But fortunately, it didn't come up. It didn't even look back, and it just plummeted. So rather than waiting for the close of my opening range, which was from 9:30 to 10 a.m., I imagined that my opening range was the first 15 minutes, because that also is a popular way to measure the range in terms of time. And I figured that with that close outside of the range and below the London low, along with the aid of Trend Predator Pro giving me the conviction that I have a setup, I can take that trade. So I'm in on that, giving it a little bit just to prove that I'm correct, just a minute or so on a lower time frame. I'm then on a 5-minute chart. Well, this is a 5-minute chart, but I'm just watching that roll through, and then I'm in. Now, ideally, I'd be out of the trade at the previous day low, because I don't want to be sat here all day, which essentially, well, I almost was. And from that low from yesterday, we can anticipate there being a bit of pushback, and we got an almighty pushback. And these markings here on the chart are essentially the TPO levels, resistance. This was the value area at the time, value area low. This was a high volume node. And then up here, we had the VWAP. So if I just replay into that, when we came back up into towards my entry, we're testing the VWAP. Now, I was actually at break even at this point, but just through experience, I envisaged that I could easily get taken out of break even and then this would just plummet without me. So I moved my stop back up to where I was prepared to lose money in the first place. So no love lost if I was stopped out. I mean, I'd be kicking myself that I didn't have a tighter stop loss. So this is all part of my journaling process. So if you've got this far, essentially this is what these videos are for, but also if this is helpful and educational for others, then fantastic. So this is where I'm prepared to lose money. That's my stake on the trade. So I moved it back up and just monitored the behavior of price at the VWAP. And once we started to lose that VWAP again, we got a nice test of it and then a pull back inside of the what was the developing profile on the day itself. So I'll just go to that now. We're going to playback mode so we can see that. And we're on a 5-minute chart at this point. There we go. So at this point, we've got a developing TPO profile that's showing me that we've got the point of control, a developing point of control. So we've done our VWAP, and then we're coming back inside of the point of control. And at that point, once we're on the right side of it, over here, a nice close. I didn't quite get the fake out high, but I'm now looking at switch bars. And again, the Trend Predator Pro will show us those. I don't know if I've got it on this chart. Let's see if we can get it into action. No, I haven't. But in any case, we've got switch bars here coming in, breakdown bars, and I'm now able to come back into break even. Because at this point, if it comes back up again, then the likelihood is we are going to see a day of chop because we've done the previous day low. As you can see, it's a fake out low. That means bulls are back in competing, and this is a barroom brawl that I don't want to be involved in. So I'd rather just get out a break even, call it a day, journal, and for my next scenario such as this, I would ensure that my target, I was aiming for 2.5 R. That's what I'm having to achieve at the moment. I'm trading in an account that has specifics, so I need to be specific with my risk management and all the rest of it. So 2.5 R is what I need to achieve. But I was concerned that despite the market was obviously in full force breakdown, the 10 a.m. hour was approaching and this could easily flip. So I wanted my stop loss placed in a place where it could flip back up for a retest and then fold again. Or if it comes up and stops me out, I'm likely wrong on my thesis and we're coming up for a long instead. And we're going to break out of the highs again. Anyway, so that was the reason why I managed the trade that I did in the way that I did. And then at this point here, I'm needing, therefore, the price to get below the previous day low. And I'm looking again at these levels, the TPO levels that I talked about earlier. So we've got our, it's done on the 15-minute chart. We've got our low of the week, value area low, TPO level. Okay. And then we've got a previous day low. So I'm half-heartedly confident that while below these levels, we're heading lower. So I was just having to hold on. And then I was bringing down my trailing my stop into the congestion at the turn of the hour, 11 a.m. Of the mind that 11 a.m. can often be a reversal. So at this point, okay, I haven't achieved my target. Next time I'll do better with my stop loss placement so that I can achieve my target at the previous day low. That would be the ideal place, just to cut the trade, get out, done for the day, instead of having to sit through all of this that could have gone either way. And we got a bit of chop, so I was pulling down my stop loss, prepared to take the money. Not quite a target, but money in the bank's money in the bank. And in any case, it rolled through and hit my target was down here. It's a TPO level from way back of the lows of Wall Street from Tuesday, the 4th of November. So we got down there, and we've probably done a lot more. I'm not sure. Are we heading down to the monthly breakout level? We're getting close to it. Wouldn't be surprised if we get there later on in the day, if not tomorrow. All right, so pretty comprehensive walkthrough there. I hope that was helpful. Any questions, let me know in the comments, and may the markets go with you.